Today's video, we're going to go over a quick trade review on IWM, turning $730 into $1,970. We're going to get into this. Okay, really quick here, I'm just going to show you on the screen just to clarify. So this is Friday's. We bought two $150 puts, 2 was the expiration. We bought 2 of those for $360 roughly. And then we bought another 2. I'm going to show you here in a second on the charts. We bought another 2 contracts at $1.85 a piece, bringing the total to $370. And then today, close to market open, we sold 2 contracts for $870. And then about an hour after that, we sold another 2 contracts for $1,102. Let's go right over to the Thinkorswim platform and do this so you guys can see this. So what we're looking at is IWM, and you'll notice the last several videos we've put out, we've been talking about this lower lows, lower highs scenarios, possible bear flag pattern. And what confirmed this trade for me was looking at the S&P 500 and also the QQQ. Also seeing weakness in those 2 areas. And it's something to keep in mind. The IWM was lagging to the downside. Normally, the IWM would be leading to the downside. As far as market leaders go, I would consider the IWM usually is a market leader. But in this scenario, it was not the leader. It was the lagger. And so what we're looking at here was this trend line break. And of course, the QQQ and the S&P 500 both broke that trend. And we were just looking for the IWM to confirm that. And of course, over the weekend, it did confirm that. I'm going to zoom into a lower time frame here so you guys can really see the action here and what I was looking at as far as why I took this trade. Let me go into let's do this so you guys can really see it. So really quick here, you'll see this. Let me redraw that for you. You'll see this channel resistant level, and then there was a bottom portion channel support level, which I didn't really notice the bottom part of the channel until today, but I was looking at this top of the channel as a resistant level. And so as you can see here, we had a we had a high over here, and this was put in this was on Wednesday going into Thursday. We had a high, and then you'll see the market sold off at a gap down. It tried to rally up and recover. It ended up closing up the gap. But the thing is, it was right back to the same resistant level as far as making a new lower high. And that's why I entered the trade right here on IWM. I'm going to zoom in just a little bit more so you guys can see it and really blow it up on your screen here. Let's do this. There you go. So same thing. You can see there's 2 lines here on the screen. One order was up here. The other order is down here, just so you guys can see it. I wanted to put it on here. One was at 7:55 a.m. The other one was at 7:53 a.m. I'm going to remove both of these just so you can see what was really going on at this time period, so you can really see the chart. You see how, follow my cursor if you can, you see how the price tried to rally up here, and then coming into Friday, it put in a high, and then this next candle here was a sell signal. Overall, this high was a sell signal, and then this, of course, following the next move was another sell signal, making a pretty bearish candle. Now, price really needed to stay above this green one, and I'll give you the price was 153.89. Price needed to stay above that. It didn't. It broke down, and that confirmed the trade overall, keeping me in the trade. Now, we did put in a low, and the low was off of this trend line. I was not 100% convinced. In fact, I believe that this was a dead cat bounce, and in fact, that's the way it played out. Now, I know what people might be thinking is, well, the market could have just gapped up over the weekend and then rallied. Well, that is absolutely true. It could have done that, and for me, where I sit, it's definitely worth the risk as far as my trading plan and the way that I like to trade. Definitely worth the risk. As far as risk versus reward goes, the chart is making lower highs, lower lows, and so I'm going to continue trading the chart as if it's in a downtrend, because that's what it is right now. And so we do see lower prices. We gapped down this morning. I immediately let this first candle play out. I closed the first set, and I'm going to take this off the screen now. And then price started drifting lower, and I decided to close out the second one down here at 739. So keep in mind, I do have a long-term trading account. Part of this positioning, part of putting this trade on was to protect myself in the long-term account because the market to me looks like it was putting in a top, and so far that looks like it's held true. I'm gonna go back to the daily time frame so you can really see what's going on. To me, this type of a pattern is a top, and then you kind of see this distribution in here. I'm not going to get into the normal daily analysis, but just so you guys can kind of see, to me, this is almost, I don't want to call it a double top, but we did find a lot of resistance up in this area. This second batch of pattern right here, to me, looks more like distribution. Although we did see a bottom today, we'll see if that bottom holds. I do know that the bottom did come in. You know, there is some support down here, so that's something to keep an eye on as far as if you are bullish the market. But I wanted to show you guys, you know, what my thinking was behind taking this trade. And so far, the first two contracts closed out at 137%. I chose the October 2nd expiration. The second batch of contracts closed out at 201%. Again, that was the 10/2 expiration. If you guys get a chance, feel free to hit the like button if you've gained value out of this video. And then I put the link of our website in the description of the video, rtbtrading.com. Check it out. If you guys would like trade alerts, trade ideas / education, if you need a little bit of education, we'll pretty much answer most questions. Feel free to join us live Sundays, 5 p.m. Pacific Standard Time, and we'll see you guys in the next video.